Awesome. So we're live now. We're coming from New York City. It's actually Fleet Week here in New York City. So happy Memorial Day to everybody. It's Memorial Day weekend, and I'm just one of the lucky fellows that stayed home and didn't battle traffic getting out of New York City for Memorial Day. So happy Memorial Day to you guys. I had an amazing event yesterday evening. I actually got to meet not one, not two, not three, but four Medal of Honor winners. There's only 72 that are actually alive today, and I got to meet all four of them. And it was an honor. It was actually downtown in Manhattan. They had an event, and I got to meet three folks from the Vietnam conflict and one from the war in Afghanistan. And it's amazing to listen to those cats talk, man. They've got some words of wisdom, and I actually am going to provide some of that to you guys. I'm going to look and earmark minute 25, I guess, in the live shot. We're going to try to cap tonight at 45 minutes if we can. That's what I'm going to aim for. I've got one of my subscribers that I'm going to do some direct help with actually after this live stream. So that's what I've got kind of planned on my agenda. So without pushing the Eastern Standard agenda much past 10 o'clock, that will help me immensely, and it will kind of help me get on with my weekend. But allow the group to come in. This is kind of cool because you guys kind of have a financial investor, and I've got a financial investor on the line here with me with my group. So it's kind of cool from a group perspective. I know there's a lot of folks that have really kind of embraced this idea of self-directed investing. I'm all about it. I'm still getting a lot of questions, and we'll continue to field those questions aggressively because I know that there's a lot of people out there in many different stages. You know, some just looking to find the right broker. Others have found the broker to their liking. And hey, John, yeah, you made it. Yep. I had to work today too. I got off early. I had one of those. I talk about planning for unexpected expenditures. So I had one this morning. I had to shell out $1,200 on my Tacoma. It's 13 years old, so it's paid me back in spades. So it was time to give her a little bit of love today, actually, and had to put some money into it. But I would honestly rather justify those expenditures on a vehicle that I've owned for so long and it's been paid off for quite some time than to try to justify going and, getting into a new vehicle. I mean, a new Tacoma now is going to cost you around 30 grand, which is just ridiculous. But I kind of think this is really cool. It's a kind of a weekly opportunity for anybody that's part of the subscriber base. If you guys are new to the live stream, the way I kind of roll, I open it up for you guys. There's no question that is exempt from the group. Certainly, if you have something, throw it out there. We've been extremely productive. This is the live stream number 10, and I'm glad to deliver this. This is kind of an informal opportunity for us to have a discussion, and I try to keep it as two-way as I can. I do allow the group to kind of get in here. I did get hit with my first question from Julio, and I will address that first. Since he was first to the plate, he's going to go ahead and lead us off this evening. So without further ado, I will address that. And like I said, I'm going to try to cap this at 45 minutes to an hour tonight if I can. Certainly, you guys have got a Memorial Day weekend. I will wish you guys all a happy Memorial Day. Keep in mind what it's for. It was really interesting getting the perspective from those gentlemen last night, the 4 Medal of Honor winners. It's just amazing to hear those guys talk and their perspectives. And in each of their cases, I mean, they were gone. They were gone. They had checked out, and they ended up making it. Really, they talked about wearing the Medal of Honor for all the comrades that they had, that didn't make it, and all their families. And they were just kind of basically living legends, and it was quite a moving experience for me last night. I was actually one of the 2 questions that they fielded because I don't have a problem with public speaking. I never have. It really doesn't bother me at all. speech and debate is kind of one of those things I took in college that kind of conditioned me for, those public forums, and I'm pretty good at them. But I asked them what they thought of the school shootings that are going on right now in society, and it was really amazing some of the answers that I got back from some of those guys. Man, nothing short of wisdom. It was amazing to hear them talk, and I want to give you guys kind of a piece of really kind of a secret to life type of a thing. So I'm going to earmark minute 25. So if you guys see minute 25 come and go, please remind me to give in one word what they explained was the meaning of life. It blew me away what the guy said. It was really amazing. It had nothing to do with how much money that you have. It has nothing to do with how far you've gone in your career. It has nothing to do with any of that stuff. And you guys are going to be kind of blown away. And I want you to take this, and I hope it impacts you guys the way that it impacted me last night. It really moved me, no doubt about it. So I'm serious, moved. It was amazing. So, but anyway, I've got Julio. I'll address first. What do you guys think about retail stocks? I'm invested in VF Corp. Ticker symbol VF. They own Vans, North Face, Timberland, and some other ones. Yeah, so North Face is my favorite brand. The thing that's amazing to me, when you're some of my favorite, brands, like either for women or for men, of course, men and women, Nike, North Face, of course, Victoria's Secret, Pink with L Brands. North Face is my personal favorite. Okay. The problem I have sometimes with retail, and I see this suffer in the stock arena as a subsector, I see it suffer all the time. In that, the thing that was hot yesterday or the thing that's hot today may not be hot tomorrow. I put Coach in this as a perfect example, and Coach is actually really refurbished their business. But it's interesting because once they've grown out of favor, it's really difficult to kind of come back into favor a little bit. I'm watching Under Armour kind of go through this phase right now. But I think the brand loyalty with North Face, now I'm partial because I'm from the West Coast, and North Face is based out of Berkeley, right? That's the guys that founded it there, right there in outside of San Francisco, at Berkeley. And so I'm partial to it being a West Coast guy. And plus their gear is actually extremely usable. I'm not so sure that that's a good enough reason to invest in the stock. I may put VF Corp kind of in the same category as some other stocks that I actually choose not to invest in. So retail is one of them. I won't touch Macy's. I won't touch any of the department stores right now. You guys know I do own Amazon, which is the top of the iceberg as far as I'm concerned. But airlines, I put in that category. Automobile makers, I put in that category. There's just certain sectors that really don't appeal to me that much. That doesn't mean that you can't put a small position in VF Corp. Do I think it's a cornerstone in your portfolio? No, I don't. All right. But I actually think VF Corp is super strong of a company. And with those brands, those brand loyalties are fairly strong. Okay. North Face, again, being the strongest as far as I'm concerned, but I'll have to look into it. I don't really cover VF very much. I am a staunch consumer of their product. Again, because you've named really my absolute favorite retailer, no doubt about it. But as far as a stock goes, you could probably win with it just fine. Make sure it's housed in the self-directed Roth. Put it in your retirement account from a small perspective. I mean, I'm kind of going through a brand loyalty play right now from one of my subscribers that turned me on to Ferrari. And I took a rather big position. I actually trimmed the position back to reflect a little bit more of an appropriate balance in the portfolio. But I don't mind owning shares of Ferrari, but it's I kind of broke my own rule a little bit, getting into retail a little bit, or, in automakers, with one of those sectors that I really just don't prefer very often. So, but it was a good question. Thank you for the kicking it off there with the discussion. What credit union bank do you use for your business services? I've been using my local credit union, but I looked at Chase, Navy Federal Credit. Both offer free accounts. It's all with Bank of America. And I've got Brent hitting me up there, asking what bank I use for your business services. So if I understand you correctly, if you're talking about the LLC through YouTube, or if I don't think you're talking about Bank of America, because I'm pretty sure that I do business with Bank of America. But if you're actually talking about for my business services, as far as my LLC, I don't have an account yet started. And I'll just be open and honest with you guys. I have yet to draw a paycheck from YouTube. I've got it building up in there, and I have plans for that money. I'm going to filter that money into probably a Robinhood account or an M1 account or something like that. But as far as my LLC registry goes for the YouTube services, I actually went through InkFile to do that service, and it was just so much simpler to use them, and it was a significant discount to what was the main one? There was one that was significantly more expensive. It was still around $500 to register my LLC here in New York City. But as far as having any type of business account checking that's attached to the business, I don't have any of that. Everything is personal thus far. Because I've yet to realize one dime from YouTube yet, and I have a reason for that. I have a goal that I'm looking to get to, and that's what I've got set up. So until I make that goal, I've actually pushed my payment threshold out, and I just here recently actually got everything square with the tax information through YouTube. I do have a mortgage application through Navy Federal. I do have checking and savings with Navy Federal. They charge me $5, I think, to start the accounts, and I don't know if that's a monthly charge through those guys. And if it is, I'm going to think twice about keeping my business with them, because I've got so much of my capital invested with Bank of America that they give me every incentive I could ask for and then some. I mean, they pay me to be a customer, so to branch out and try to set up a business account with anybody else is somewhat foolish. And that's why I'm actually thinking about going with M1 or Robinhood and using the proceeds from YouTube to actually channel into a portfolio. So the monies that are made from YouTube will actually fund a side brokerage account. Obviously, it can't be a retirement account, but it will be funding stocks in one way or the other, because I don't need any money that I make from YouTube, nor is that the goal of this project. I don't know. I'm somewhat satisfied with the growth of the channel. I'm more encouraged by the feedback that I get from a lot of people that tell me that they would have never understood this information had they not come across my channel. So that's payment enough for me, no doubt about it. But as far as the monetary compensation that I get from YouTube, it is what it is. I mean, it's just money. And that'll get me to minute 25, and I'll talk a little bit about what those guys talked about last night at the function, the 4 Medal of Honor winners, when they were talking about kind of meaning of life type of thing. And it'll really help you not only in your investment life, but it'll also help you kind of stay grounded, keep perspective. Not everybody just floats through life and everything is super easy, unless you're Ryan Scribner. I would joke with him. I got to hold him back a little bit, man. He always tells me I'm too hard on him, but I'm just trying to, you know, you're bestowed that. He's up over 200,000 subscribers now. I'm so proud of him. No doubt. I told him, I said, the sky's the limit, and he's killing it. He's absolutely doing so many good things, man. But it's hard, you know, you're bestowed that much success. It's hard to keep a perspective. I think he's mentally tough. I think he'll do it, but I had to keep him grounded. So anyway, I'm going to continue on here with some of these questions here. I picked up on the Dave Ramsey live stream today. I'm actually going to offer Dave Ramsey as one of my featured channels. But his live streams are pretty cool too. There was a lady who went on there, said she was getting a divorce. She's got about, what was it, $8,000 in credit card debt. She's disabled, and she was making $783 per month. So her husband was leaving her with nothing, basically, and asking Dave what to do. And, you know, we talk finances all the time, and unfortunately this topic is deduced a lot to just money, you know, and you know, financial security can mean so much more to you than just the dollars and cents of it. You know, investing in a stock and having said stock go up. There's so many more tangible and intangible reasons as to why you invest in the stock market. And that really touched me, because Dave Ramsey basically told her, said, you know, with $798, you know, of monthly income, he said that the future looked pretty bleak for you unless you were willing to explain the nature of your disability, if you were able to work from home, if you were able to work at all, you know, because he said at 792, he said, I don't know how you're going to survive on that type of money, you know. Well, it was pretty interesting. Let me scan up here. Ryan, what are your thoughts on oil stocks getting beat up? Is it a good time to get in? Gosh, I've been investing. I've got 1979, who's a staunch supporter of the Friday deal. So I always try to address his questions or her questions, whoever I've made the mistake of being gender specific, and I have to learn to be gender neutral. Sometimes I look at these screen names and I assume, unless I know who you are, oil and gas, oil trades so much different than any other commodity. And they're all tricky. Gold is tricky. Silver is tricky. But with respect to oil, I do think it is a fine entry point with oil. I mean, if you look at ExxonMobil, it dipped back below 80 again. I think ExxonMobil is fine. I think you're getting a good entry point on ConocoPhillips right here. I'm waiting for Saudi Aramco. I think I'll probably take a small position in Saudi Aramco when it does go public. It's supposed to go public this year. I'm very excited about that. Of course, Schlumberger and Halliburton, both the oil service providers, those are great. Midstream, Magellan. Oil's always been one of my favorite sectors. Technology's always been my favorite. And oil's right there at the top. I love investing in oil. Right now, I'm about 7%. The remaining holding that I have is Royal Dutch Shell. And Royal Dutch Shell also provided a very good entry today. What I would say to this, and you're putting me into an interesting position, and I encourage you guys to do this. I want you guys to back me up against the wall a little bit, but here's how you do it. I don't know what the rest of your portfolio makeup looks like. So what we're aiming for energy is 9%. I'm at 7%, okay? 7% of my portfolio is $13,000, okay? If you're looking at 10,000 or 50,000 or 100,000, my recommendation to you is going to be a little different, whether or not we put you in one single stock, two single stocks, or three single stocks, because the dividend benefits of those companies cannot be ignored. They're fantastic, all right? And I would give the stamp of approval on adding any one of those big three: Royal Dutch Shell for European exposure, and of course Exxon and Chevron for domestic. And of course, I mean, they're worldwide companies, but they're based out of US. I would give my stamp of approval to go ahead and take smaller positions. I mean, 10 shares of ExxonMobil at a 4% dividend, $800 gets you done, right? Even if you wanted to do a starter position, cut it in half, right? 400 gets you 5 shares. $400 for 5 shares of ExxonMobil to start the dividend reinvestment is a good deal. So that's a long-winded answer to your question, but I would certainly like to know why you want to invest in energy. What specific void is it filling in your portfolio? Do you have the ETF in place? Do you have the 401k? And I think you've talked to me about that before. So I assume some of that stuff is in place, because if you're going to invest in energy, I would like to see some preliminary investments in place first before you go ahead and start taking the plunge into, like, let's say the XLE, right, which is the ETF that mimics the energy sector, or you start going and picking up individual stocks, which, with regard to energy, I actually prefer to go with individual stocks in energy, like I do. So I've given you my 3 holdings, and it's about 7%. So I'm a little underweight oil right now. I've been investing in it since it was in at $20, guys. So I made a ton of money in between 20 and 45. So just jumping in right here at, what is it, 75 right now for Brent. So you got to be a little bit wary, but I do think we are in a long-term cyclical upswing in oil and not a downswing. Okay, we've got inventories coming off. Venezuela is in chaos. So there are definitely some factors that are driving the price of oil up, and I do believe that it continues upward. Okay, so thank you for that question. That was awesome. I love talking about oil, and I've got Rohan right below, one of my good friends, man. Very cool. Nice to see you, Rohan. Hope you're doing fine. Would like to know your thoughts about SIP investment in the VOO. Versus just waiting on a down day and then investing in VOO and VTI. Wow. Gosh, I don't know if it was slightly misconstrued or if I put the message out there. I like both of these ETFs for starters. Do I necessarily like them both in the same portfolio? Not necessarily. I really think you could probably pick between the two, okay? The systematic investment program, if you guys see his question there, is a really, really good one. It really just depends on how much capital you're bringing to the table to start. And this is really what I would love to define for people. And this is a lot of the value on why I do this every Friday, is a lot of people struggle with this very question. You know, I've got $100 a month to invest, but I don't have any capital saved up. You know, when do I buy my first, share of VOO, which is running around $250 right now. VTI, I think, is around $140. Okay. So 10 shares of VTI is going to run you $1,400. 10 shares of VOO is going to run you $2,500. And that's like, wow, that's a lot of money. Cut it in half. $1,250 is going to run you 5 shares of VOO. How do you systematically set that up to strategically buy VOO or VTI? And I really think you need to look at buying ETFs a little bit different than you look at buying single stock. Okay, I really do, because here's the thing: with $10 or 10 shares of AT&T is going to run you $360. Okay, that's going to buy you 1 share of VOO, 1.5 shares. Okay, so the best way to buy VOO, honestly, is prove to yourself that you can save up some starting capital first. And I know, Rohan, you're working with a really good portfolio already. And I know we had you on kind of a consolidation path, right? So if there was a way that you specifically could consolidate or keep consolidating your portfolio to where you were down to VOO and 5 really good cornerstone stocks, and I don't think you're there yet. Perhaps you are, I don't know. But I think when we had talked, that's kind of what we talked about. And I see this all the time. You want to own a lot of different stocks, and you own 1 share of a lot of different stocks. But I think to consolidate those names and get some cash going inside your brokerage house, and then make one nice big purchase of VOO at $2,500, right? And then do your systematic investment program where you're adding, let's say, $100 a month, but let it build up in there for 4 or 5 or 6 months. $750, whatever, and then buy 3 shares at the same time. So it gets you guys that exposure. If you have a systematic downturn in the market, or you guys wanted to employ a little more strategic approach to it, which is another thing I recommend, is to allow those dollars to go into the money market and just sit there. Okay. So let's say you do $100 a month for an entire year and you've got $1,200, and we get a good correction in the market, it dips back. That may be the time you want to kind of step in at a 10% or a 15% discount. And 2018 has already provided you that opportunity, right, to go ahead and step in and buy a bigger block of the ETF, right? Because you're not getting these ETFs at a price share of $30 like you are AT&T. VOO again is $250 to buy 1 share of the index. So it's a little bit different. You have to kind of set it up to really attack these ETFs to get invested in them in the correct way, and make sure that your dollars go as far as you can to try to save you guys some of the trading fees that go into it. All right. So I told you guys at minute 25 I was going to give you the meaning of life, and I hope this really resonates with you guys. I'm excited to provide this to you guys, and I want you to remember one word from this discussion, and this is coming from our 4 Medal of Honor winners from last night. They really touched my heart, no doubt about it. One gentleman was so distraught when he got back from Vietnam that he actually ended up living in a cave for 2 years of his life. And he was notified. He checked his mail once a week. And when he went down and checked his mail, they notified him, said that he had to be down at the VFW to accept a phone call. And it was actually the general on the phone telling him he was getting awarded the Medal of Honor. But very cool. But he was actually the gentleman that actually offered this. And I offer it to you guys now in honor of Memorial Day. And when he was asked, what in reflection, looking back over his life, what he was most proud of, what if he could impart to people, what was the biggest meaning? And in one word, he said significance. And I thought, wow, that's amazing. Tell me more. And he went on to explain, it's not about significant achievements in your life. It's not about significant monetary achievement. It's not about that. It's your significance in the impact that you have on others. And that really resonates with me, because you're not all the time going to get paid when you're looking to define your relationships with your family, or you're looking to define your relationships with your friends, right? A lot of you guys are just screen names to me, and I don't know who you are, unless I've got Julio with a picture on a screen name, but little pieces of that. And if you guys take a little piece of, the Independent Investor channel, and you can define a little bit of significance, in my reflection on this small project, that's really what it means for me. But it's a much grander thing when I look back over my life and say, did I make a significant, was there significance in the interaction that I had with people, friends, family, colleagues at work? Did I put their needs in front of mine? And it really kind of separates what a lot of people think about, monetary and driving the nice car and having the nice fancy house. All that stuff over here was over here. And it wasn't at all what he was talking about by really coining the term significance on this side. So I would ask you guys to kind of reflect over your life, man. If you're 20 years old out there and you're young and you're hungry and you're looking to get involved, or you're 30, 40, 50 years old, maybe you're 60 years old and you're tuning into the Independent Investor channel, I wanted you guys to hear that in one word, and the word was significance, and what that means for you guys, what you had done as a good deed in your life, because I tell you what, the impact there is immeasurable, and I think a lot of the time society drives us, for that financial compensation. We have to have that raise at work. We have to do better than our neighbor. It's the keeping up with the Joneses all the time, right? Mr. and Mrs. Jones got a new car, a new SUV, so we have to go out and buy the exact same thing. I think a lot of the societal pressures are put on really everybody, and especially in the United States, it's almost like an obligation to succeed, in the eyes of society. And it was amazing to hear, him really separate the line between, what the societal views of success are and what he felt was real success by reflection, looking back over his life, and what he felt was significant and the significant impact in the relationships that he had with people. So I told you I'd tell you. You guys run with it how you will, but happy Memorial Day. Certainly thought that was appropriate to share with you guys because it's going to stick with me forever. And it was just an awesome, awesome point, man. So let's kind of get on here. I'm going to skip down here. I got Lee on the line. Hello, how are you? It's very cool to have you guys. All touch cost, low, Amazon, Walmart. That's about it for retail. Yeah, Brent, I agree with all those. I've owned Lowe's. I've made money with Lowe's every single time. With that said, I just took a long position in Home Depot. Honestly, it just came down to a personal choice for me. I like Home Depot better. That's just kind of what it came down to. And I had to pay more of a premium. You're probably right. There's actually probably more upside potential in Lowe's right now than there is in Home Depot because I've watched Home Depot do nothing but go up. Walmart is an actual phenomenal entry point right here. It was flirting with, if not over 100 there just briefly. And it's adjusted back to the 80s. And of course, Amazon is in the stratosphere. You really have got to have your big boy pants on to look to own and invest in Amazon. That's a different animal altogether. And then of course, Costco. I agree with all of those. Thank you for that share. Honestly, I would say that probably 2 out of those 4 are probably cornerstones for beginning investors. And I would add Amazon later on because I think as a cornerstone, I don't know if I would put Amazon at the top. I think I would probably prefer Apple computers as a cornerstone in the portfolio before I would invest in Amazon. And I think you need to have a little bit of capital to be able to invest in Amazon, guys. I mean, one share run you $1,600. So, if you can't buy multiple shares, buying one share of Amazon, I don't know how far you're going to get with that. I mean, I own 5, and that's kind of a dinky holding, but it's $7,000 of holding of Amazon. So, but I agree with that. Thank you for the share. I agree with that, and they are in retail as well. Home Depot, I would offer to that, and that is a holding of mine. I have a mixed feeling about VF. I'm up 27%, looking to sell it during the holidays and get into something more long-term. If you're up 27%, you have the green light from the independent investor channel to sell. So I'm talking to Julio right now. And if you guys, make no mistake about it, if you're a self-directed investor and you've held those within your retirement account, you may sell the stock and it may go up another 20%. Okay. You may hold the stock and it may go down 20%. All right. And then you're going to be left with a measly 7%. Selling at a 27% profit. If it were me, I'd sell it. And I'd roll the profits into a little bit better, more blue chip type of a name. And then sit on that. And that'll kind of help accelerate some of those shares going forward. I mean, a nice thing, I don't know what type of profit you're looking at by that 27%. Think about how many free shares of stock that you can buy. And that's one of the secrets of how I look at things too, is I've taken a lot of profit and rolled them into new shares of stock as I've been accumulating my share base over the years. And you guys know what type of portfolio that I roll with, but make no mistake, it's been built up over time. It didn't happen overnight. And it's been a lot of compounding moves just like that Julio's thinking about. And I would absolutely endorse that move. Up 20%, that's a great profit, something to be proud of. Take your profit and roll it into something that you think maybe is a little bit more beat up or a little bit more stable. That you want to put into your portfolio a little more long-term. No doubt about it. You can chalk it up as a medium-term trade, and 27%, you're a winner. I'll be the first to applaud you. So really, really good job on that trade, no doubt. Very cool. This thing kind of jumps around. Looking at M1 after last vid, I think I like it. Have you had a chance to look at it? I'd like Brent to hit that up. I've got Les Gibson on the line. Brent is an active investor in M1. I think his wife actually invests in M1. And the best I can tell from my dialogue with Brett, they're very happy with it. And I have not had a chance to look at it because I am not searching out brokerage. I mentioned at the top of the show that I am going to be looking at a brokerage to funnel my YouTube earnings into at some point to try to accelerate my growth on the backside, guys. So that's what I'm going to do, because I'm not doing this to support my lifestyle or anything. I'm doing it as, kind of a side business, and that's just the way I want to do it. But I've not looked at M1, but I'd like Brent, if he could, to help out with Les Gibson talking about M1. I know that they offer the ability to buy partial shares, right? So if you just wanted to buy $100 worth of Google, you could do that, and you could build it up until you owned one share of Google, which is right now is trading for 13, 14, 13, 12, 11, 1100, approaching 12, I believe. I've been beat up with Google. I'm still down in Google, but that's fine. I'm long the shares. So, but thank you for the question, man. Very cool. Eric's on the line. Nice. How are you? It's good to see you guys. Happy Memorial Day to everybody. Very cool, man. You might as well come and get some FaceTime with an actual military guy for Memorial Day, right? So it's a good excuse to hop on YouTube and get some financial advice as well. So, yeah, Business Services LLC. Okay, cool. So that's what I thought. I was kind of taking a shot there at it. I just recently got all that stuff squared away. So, yeah, Brent's offering some killer advice, man. I don't know. You're such a sharp guy. I love when you're on here because you can kind of help me answer some of these questions. I really appreciate it, man. I owe Financial Investor a bull, no doubt about it. It's not going to be a big one, but I think I'm probably going to do my giveaway. I got to get to Manhattan and pick up my souvenirs from downtown Manhattan. I think Brent's going to get one, no doubt about it. So I appreciate the help. I know these guys also appreciate the help. Hopefully you're getting some growth out of the channel. I mean, we're still a couple relatively small channels, but I think we're very sincere. So I'll continue to fight the good fight. I've got Jake on the line. I just saw a picture of Jake on Facebook today. That was pretty cool. I assume that's your daughter. Very cool. Recently saw an article about Netflix is now the biggest media company. I saw that as well today. Yes, surpassing Disney even. What are your thoughts on that? I know Disney is going to be coming out with a streaming service soon. I'd go with Disney every day and twice on Sunday. I'm not a fan of Netflix. Their burn rate, they spend 28 billion, 28 million. What do they spend on keep staying relevant with content? Their price to earnings is out of this world. The only way that I would ever endorse Netflix, if I were to take my money and invest it in my portfolio, I would own no less than $1,000. If I was going to buy, 5 shares of the stock at $1,500, okay, I can endorse that. But as far as taking all your nest egg and putting it into Netflix, a high growth stock, that's not something I advocate for. I apologize. If you guys just went completely against me and went out there and bought, $5,000 worth of Netflix, you'd probably do quite well. Okay. Here's the thing. To do quite well investing in Netflix is every day, day in and day out, you have to be an investor in Netflix. And God forbid you get a hiccup in this growth, because those high flyers are the ones that get crushed when they start to lose interest in their product. They start to lose subscribers, or they start to lose brand loyalty, or they fail and they come out with a few duds on their offering list, for their entertainment. I wish I could speak more in tunely about the product offering that they have. I'm not a subscriber to Netflix. I actually do direct TV through AT&T. That's just what I prefer, you know. But I'm not a fan of investing in Netflix as a long position. I would take a trading position if you see fit, and the first 50 to 100% I made, I would trade it in, and I would buy blue chip investments. Let Netflix settle in, let it get a little more established. I mean, there's a lot of high flying growth companies that I would rather invest in than Netflix, but I would buy Disney, no doubt. And I've owned Disney. I own 50 shares of Disney right now. So that's more of a cornerstone in a portfolio if you want to be an investor. If you're that big of a believer in Netflix, then buy them both. Buy a larger position in Disney, take the 2% dividend in Disney, take a long position, and then go ahead and buy Netflix on a much smaller basis. You know, if you're just starting out, you know, buy a couple shares of Netflix for $600, and that way you're a shareholder in it, and that way you can maybe participate in some of this accumulation. Maybe you make 50, 100% back on your return. I wish I could tell you guys I am an investor. It intrigues me. Okay, don't get me wrong. But I invest in other things that I justify. Amazon is one of those that, you know, as a value investor, I really shouldn't invest in, but I do because I have to. It's just that simple. Netflix is not one of those stocks I have to invest in. Amazon is. And that's just my perspective on it, okay? Right, wrong, or indifferent. You guys go and invest in Netflix next week and make money, you're right, and I'm wrong. It's that simple. Because this game, I say it all the time, is about making money. Just don't overexpose yourself too much to a high growth name like Netflix, because it is a beloved stock. It is beloved. If not the most beloved stock on Wall Street right now is Netflix, okay? So just be careful, all right? There, Brent. Brent's hitting less. Thank you, Brent. I appreciate that, man. That was a genuine question. I really appreciate it. Do you agree with Dave Ramsey's baby steps? I do. I think it helps a lot of people really realize that. I tend to not generalize like Dave Ramsey does. I talk a little bit more in specifics about what a new investor. I'm talking to Jake Jara right now. I tend to speak about to new investors in the phases, and you guys, you know, subscribers, you guys have watched a lot of my content when I talk about reducing debt, identifying ways in the budget, you know, to kind of free up some cash flow. I talk about building a savings account, and then I talk about starting the account. You don't realize how many people out there have difficulty with those preliminary 5 steps. Okay. I have people who come to me all the time and they're like, I'm so fired up. I want to do this. Can you help me? Well, of course I can help you. I'll help anybody. But then they'll go without missing a beat. They'll turn around and it's as if they're validating for themselves that they need to get it off their chest that they're interested in investing, when in reality they have no interest at all of actually putting their money where their mouth is. And eventually, to become an investor, you have to take the necessary steps to become an investor. Okay. You can't just, now you can learn, you can read books, you can research, you can start the account, you can choose your broker, you can identify things in your budget, all of which will cost you nothing, but it does take at some point a little bit of effort on your part to identify how and when you want to make this work. Okay. So those are the specifics. He talks about baby steps, and I'm not entirely specific. I think this is the theme that he's trying to talk about. I would just rather tell you what the steps you need to take. And I cut right to the chase. And a lot of people don't resonate with my message because they just listen to me and they say, God, that's obvious, and they blow it off. But there's a lot of underlying premise by me giving you the advice that I do, because I've been there and done that, okay? That is exactly what you need to do. And a lot of people take it as cliche. Oh, you need to reduce your budget, or you need to find money in your budget and most people are like, no kidding, Ryan, that makes, you know, that's easy, right? It's not that easy. And what I'm trying to drive home to new investors is it's not about that $50 that you save. It's about identifying, piecemealing that $50 out of your budget and paying you first where it would have otherwise been wasted in some other avenue of your life or some other aspect of your spending, right? Instead of earmarking that $50 to pay yourself first. And that's the most important thing. But as far as the thing I don't understand about Dave Ramsey, he advocates for a few things that I don't really agree with. The most important part of my message is offering information on the self-directed account. And I've had so many people hit me up and they're like, I didn't even know that existed. And I'm like, neither did I. That's why I'm sharing this with you, because I didn't know self-directed investing existed either. What does it mean for you? You know, and if we can get people placed in those accounts, and the first thing people come back and they tell me is, I can't do this, Ryan, because I don't know what I'm doing. I don't know what I'm doing. I don't know how to do anything. I'm stupid. I don't know how to invest on my own. And my thing is, and I always use my cell phone analogy. I always pull out my Apple phone and I turn it around and I look at it and I say, what's on the back? Well, that's your iPhone. Oh yeah, what company is that? That's Apple. Okay, have you ever heard of them? Of course I've heard of them. Okay, well, there you go. Start there. See, you're not so, it just takes a little bit of mental conditioning and saying, hey, I've got these ideas over here. And that's the benefit of you guys bouncing those ideas off me. Hey, what do you think of Netflix or Disney, right? I'm going to tell you Disney, right? So if that fits into your portfolio, fantastic, right? So now you've got some exposure to the discretionary sector, and there you go. You're building up toward your portfolio allocation. If it doesn't fit for you, then okay. We live to fight another day. No big deal. But at least you can bounce these ideas off of something. As crazy as you think they are, go ahead and bounce them off me. It's okay. And eventually we will get you to where you need to be. And in a quick summary, it's really to hold the correct account with the very best companies in that account. That's the easiest way I can simplify investing. And you do not have to be an analyst. You do not have to be a fundamentalist. You do not have to be a value student to do that. You don't, okay? Everybody's like, gosh, you do a lot of research. I had a colleague of mine just this morning. We were on inspection, and he says, Ryan, I understand you do a lot more research than me. And I was like, what research do I need to do to know to invest in a company like Apple or 3M? I don't need to do research. I don't. I just buy it because I know that they're the best in breed. I don't need to scour over their balance sheets to try to understand and justify myself buying Apple. I don't need to do that, nor do you. You don't need to do that, okay? The blue chip companies are established. They have a reputation for paying shareholders over time, and that's exactly what they're going to do, all right? Now, if you want the absolute passive approach to investing and you don't want to think about it at all, and single stock just scares the hell out of you, then just go ahead and buy the ETFs that I'm talking about. Put it in a self-directed account and just ride them for the rest of your life. That's about as simple as I can put it. And no education is necessary to embrace that fundamental premise of investing, all right? So thank you so much. I do agree with the baby steps. As long as it helps individual investors, I would rather just specify what exactly you have to do to have success in the stock market. And a lot of it is psychological. A lot of it's psychological. It's not physical, because I've got subscribers that make significant more in salary than I do. Why is it that I have a portfolio making less than the median income that's, 5 times the size of your portfolio? It's about the mental aspect. It's because I want to do it. That's it. That's really all it takes. Look in the mirror and ask yourself, do I want to be an investor? And you have to be honest with that answer that you give yourself. You really do. I'm going to try to kind of finish up in an hour, guys. So we got about 12 minutes left. And I'm going to get down to some of these questions. For a very good discussion tonight. I really appreciate it. Did they ever offer a military Dave Ramsey course? Absolutely. I just had a colleague offer it. It was a full course. There was a ton of people who got a ton of benefit out of that course. Not so much on the investing side, but on the debt reduction side. And there was some stats taken at the beginning of the course, and some stats taken at the end of the course and the statistics were voluntarily provided by the students of the course, and they were honest, and it showed a significant reduction in acknowledging the debt and looking for strategic and creative ways to reduce that debt, to really just provide them a little bit more peace of mind in their day-to-day lives. They didn't really have any business talking about investing, but at least it prepared them more to actually entertain the prospect down the line of looking at an investment option, because they had taken the steps to reducing that debt. So yeah, they just did that. They just did it a couple months ago, and it was amazing. I'm very good friends with the guy who put on the course here on behalf of Dave Ramsey. It's a very structured course, and you have to be kind of careful a little bit with regard to conflict of interest, but it was very successful. Thank you for asking that question. It's very cool. Steps are great. I'm a planner. Yeah, I know. As long as they work for people, I don't care. I would tell you whatever you needed to hear to get you excited about investing, because you may not understand all the ins and outs when you start investing. But if somebody, mom, dad, spouse, grandparent, whatever influences in your life have told you that you need to invest, don't wait. That's all prudent advice. They're all right. So definitely want to resonate with that and get that started. I just try to help you get started in the right place, even if you don't understand all the terminology right off the bat. And I contend that you really don't need to. All right. That will come in time, but there's nothing holding you back from starting the account and starting to fund that retirement account going forward. All right. So very cool. I was never offered to do that. Wish I could have. Yeah. You were working in a lot bigger outfit. My outfit is a lot smaller. I'm pretty sure you're a Marine, Jake, right? So yeah, it's a pretty cool service. I actually offer, I'm a specialist at work. So I actually help people, colleagues of mine, deal with all kinds of different issues, stemming from, debt to talking about, how you can set up a budget, what do you need for a savings and checking account, things like that. But yeah, I think it was offered for free too. So it was a pretty cool deal, actually. Oil's good for quick cash. Yeah, it could be. I made a lot of money last year on oil. That's Doug I'm hitting up right there. So thank you for your question. I'm going to go ahead and round out this round here and try to get under an hour here. I do have a self-direct help I do need to make to a subscriber who asked me to help, and I'm going to give them a call here after the live call. Hopefully I can get through and provide some direct help to this individual who asked me to do that, and I don't mind. I don't do it anymore. I did it when the channel was fairly new, and it's hard. I don't have time. And I kind of get a little bit emotionally invested into, really helping people, a lot of different broad spectrums of issues. And I'm going to help this individual if I can. So we'll see what happens. I just seen it went down this week, but I'm buying VOO just like you teach us. Yeah. So those ETFs, don't worry too much about a perfect entry point. I do think the market is relatively high. I've got 1979 wood. So again, don't take your entire nest egg and throw it on VOO. If you need to build up a strategic position, again, you're not giving me any dollar amount to work with. So if you're looking at $5,000, for example, would I take the entire $5,000 and put it on VOO? You could. All right. Would I at the market in these levels? No, I wouldn't. I would go ahead and invest half, and I would go ahead to look at strategically buying the rest in $500 blocks. Right. So if you got a 5% downturn in the market, let's say, the market wakes up next week to the summit getting canceled. Okay. And it ends up taking a leg down 5-10%. That would be an opportunity where you could maybe strategically pick up $500 more, buy them in 2 share blocks, right, as the market goes down. That's what I would do. If we were in a bear market right now and we were in a prolonged recession, I would say take the entire 5,000 and dump it on the ETF VOO, right? Dump it on the S&P 500. You'd be fine doing that. but you have to acknowledge that the market is in fact at an all-time high. So if you did take that and put it into the market right here at an all-time high, and it did adjust back, you could take a larger haircut on that money. Now, the flip side of that is neither me nor anybody can predict where the market could go, and I could be dead wrong on that prediction, and the market could go on a historic bull run for the next 2 years. All right. So in that particular case, taking the entire 5,000 or 10,000 and throwing it on the S&P 500 would be okay, right? Because no matter what dollar amount you're going to pledge to the S&P 500 right here, remember, from that day on, you're going to start to be paid that 2% dividend from the S&P 500, right? So you kind of want your maximum in there if you think that the market is going to continue higher. I just think it's fair to at least acknowledge that the stock market is still hovering around all-time highs right now, okay? So just kind of be careful. Use your strategic defensive mechanisms. If you want to buy the VOO, do it. You can scale in, you can scale up, you can scale down, whatever you want, all right? Just be kind of cautious and make sure that you do it in the right account and you be good, all right? Those are all winning proposals, all of them. You can win with any one of those options, all right? So I've got a few more. I got a lot of questions here at the bottom here. So VOO 250 is still at a discount. Yeah, I believe it is. I believe it is. The S&P 500 is the best way to own the stock market. It really is. It's the most accurate indicator. I have both VOO and VYM. Yep, the high dividend growth. Yep, I'm aware of that. I'm talking to John Restrepo here. But the VYM expense ratio is twice as much than VOO. Do you think in the long run the dividends from the VYM will outpace the higher expense ratio? Yes, I do. Because at 0.08, you're still significantly lower than the market. I think you'd be just fine owning the VYM. I have not looked to compare if there's any redundancy, right, between the VOO and VYM. I'm sure that there is a little bit. You know, if you're a single guy and you own both of those in your retirement account, take a trading position on one of them. You know, what's to keep you from maybe keeping the VOO long term, which would be my preference over those two long term, but let VYM take off for you and make some appreciation for you. Let's say you make 10, 20, 30, 40, 50 over the course of a long-term investment. And you're putting yourself into the driver's seat to look at that VYM someday and maybe take a little bit of that profit and roll it into some cornerstone stocks in that portfolio, right? You don't have to get rid of either one of them. Continue to grow the VOO, continue to grow the VYM, right? But I think if it were me, I would try to own one because that's really all you need. You could look to build this portfolio and have 250,000 in VOO and 250,000 in VYM someday. That's great. You could retire, turn the dividend reinvestment off on VYM, and there you go. You've got 3% of dividend being paid to you at the end of every year to help supplement your 401k income, maybe a retirement package that you may have, and or Social Security if it in fact is available to you, depending on how old you are. That's a killer question. Thank you very much for that. That's a well thought out question. You're going to win with both of those, but to answer your question, 0.08 is going to cost, let's say you're 20 years old and you invest in VYM for 40 years. It gets you to 60 years, right? That's going to cost you $14,000, okay? To just put it into context, you're probably going to make hundreds of thousands of dollars in compounding interest. That's really going to overshadow that $14,000 that you paid to the VYM as an expense. You're going to pay $7,000 over 40 years for the VOO, right? So that $21,000 that you could potentially pay over a 40-year cycle is going to seem like peanuts when you're talking about hundreds of thousands of dollars of compounding interest on those accounts, right? So very good question. I think you'd be okay just owning them both. All right. You can use long-term. So I got Brent. He's hitting one of those calculators up to John. Yeah, for the reinvestment calculator. That's it. I've just got it memorized. And you can actually account for those fees, and it'll actually show you what those fees will run you. Go to the Trading Academy. That's where mine comes from. So don't just use a compounding calculator. Use a calculator that's going to incorporate year-over-year return and also expense. Because the one off of the Trading Academy that I recommend, it's in the notes of every one of my videos. You can actually go in there and you can actually put that 0.08 expense into that calculator, and it show you exactly what it's going to cost you over the long term. So Keegan's like, I got to replay this back, man. And that's pretty cool. I like to keep it as informal as I can, man. But and I've got some really cool live feeds coming through, man. Brent's a big help, man. I really appreciate that. How about that oil dip? I have Halliburton, Chevron, Conoco. Geez, I didn't even read your question. So I've got Bob Goldcat. If I were going to set up a super portfolio of oil stocks, get some Exxon or dump it in S&P, have a maxed out Roth and a brokerage? That's a really good question. It depends on your exposure in those holdings to the overall portfolio value that you have. And a lot of the things that I recommend you guys do is get into a habit of running reports. Okay, I know in my brokerage, they allow me to run a report to show my sector allocation. Okay, so the percentage of dollars that's why I know right off my head that I'm at 7%. Recommended it is around 9. Okay, so if you're at 20, all right, and you're up in either Halliburton, Chevron, Conoco, those are all fantastic companies. I would love to tell you to just keep them all because you'll be fine long term. Okay, you don't need to dump any of those names. Since you don't own Exxon, you're fine. You don't have to run out and buy Exxon. You already own Chevron, which is one of the world's biggest. But I don't know where you are in your positions of those 4 or those 3 that you own. But certainly look at the total overall portfolio exposure of those oil names and make sure that you're not owning those oil names at the expense of other sectors, okay? Financials, healthcare, technology, discretionary. Staples has absolutely been obliterated. That's sometimes a time to buy. I'm just saying, okay? Everybody out there wants to beat up the good names that we have in the Staples group, General Mills. We've got Kellogg, we've got Campbell's Soup, you've got Kraft Heinz Food, which is one of my holdings. Maybe time to pick up 10 shares of Kraft Heinz right here at $57 a share. It's crazy. These guys are trading in low teens multiples. So, you know, without knowing the percentage of allocation in that portfolio, I'd certainly like to understand a little more. But, you know, depending, you're probably sitting on some profit in those names if you had bought ConocoPhillips early enough, because that's a phenomenal company. Chevron, Halliburton, if that's your only service provider, right? Schlumberger being the other one that's my favorite. You know, if you're up in that, you might want to take a profit, maybe trim back some of those positions in there. But otherwise, if it's not hurting you, I own Chevron and Exxon and Royal Dutch Shell. One day does not shake me out of oil. No way. So I'm actually holding all my oil names. I'm not tempted at all to sell them. I'm getting paid a fat dividend to own those. So an adjustment back in one day means nothing to me, quite honestly. So yeah, it's going great. I got Michael on the line here. Michael's always coming on here on Friday. Very cool to see you guys. Happy Memorial Day from Korea. That's awesome. Thank you very much. That is very cool, man. Very cool. Thank you. That's the other side of the world. Actually, it's probably daytime or morning over there. That's awesome. With the science behind accurately reaching a 7% or 8% annualized rate of return, what is it you look for to rise your portfolio to 7%? Do fees subtract from the annual rate of return? Well, that's one of the best questions of the night. Greenhorn Grill and Smoker. The answer is yes. Fees absolutely take away from your year-over-year return. And this is one of the cardinal sins that I talk about all the time, is that when you go into a financial planner, they are going to advertise a mutual fund to you that provides a year-over-year return of, let's say, 10%. What they don't tell you is that the cost basis of that mutual fund is not going to render you 10%. It's going to render you 10% minus the 3% of fees, 7%. Okay. Let's say if the mutual fund underperforms the market, or they get you into another mutual fund that, let's say, returns 9%, and there's a 2.5 fee, that has to come right off of the top. The unfortunate part about it is if you have a downturn and you have let's say, a 20% downturn market, they still take their 2.5%. So that comes off the top no matter what. The answer to your question is it absolutely takes away from your year-over-year return. And that's why you have to be so careful with putting your money into a self-directed account. If you do that, you're eliminating all those fees. Then you want to house them. Those ETFs, the only fee that you're going to pay in that ETF is the expense ratio and the cost to buy the asset, the trading fee, okay, which is around $6 to $8. Okay, so you have to be kind of careful with that. Certainly, we want to keep those to a minimum, but that's also why we like to, from the beginning, as if you have $0 invested up to $50,000 invested, try to buy those stocks or ETFs and hold them. Don't sell them. Okay, that sell is going to cost you another $7, and I would rather have you take that $7 and use that $7 to buy stock. All right. Instead of using that $7 to buy out of a position that you've already spent $7 to get into. All right. We want to buy and hold when we're starting out as a new investor. All right. So that is a killer question. Killer. Thank you very much. What do you think about Bank of America? I was just in the Bank of America building in Manhattan yesterday. Impressive. If I could have pulled out my smartphone, which wasn't allowed, and bought the stock yesterday, I would have. I own Citigroup and Wells Fargo and JP Morgan. Bank of America is probably going to be next. I think it's one of my favorite banks. I'm a customer. I love it. I love the stuff they're doing. Their technology is fantastic. I mean, they're firing on all cylinders, and I love Merrill Edge. So, yeah, I think Bank of America is a buy right here at $30. No doubt about it. It's been taking a pause. I'd get on the bandwagon while you can because I think it's putting in a base at 30. And I think it continues higher. So, yep, I advocate. And I would actually advocate for putting Bank of America into your portfolio as a cornerstone in the financial sector. So if you guys are interested in owning Bank of America as a cornerstone at $30 a share, 10 shares, that's only $300, you know. So for a $2,500 portfolio, you know, 300's giving you some pretty good exposure, you know, double it up, and you've got, you know, for $600 you've got, you know, 20 shares of Bank of America. That's a nice position, and I endorse it all day. I love their business, I really do. And I was taken back yesterday. I was in the Bank of America building yesterday in Bryant Park, downtown Manhattan. So it was very impressive. So I'm all about it. The only good shows on Netflix are House of Cards. I've heard this. And Trailer Park Boys, not worth $350 a share. Yeah, it's the subscriber growth, but I think my concern is what their burn rate is, right? They're burning through a lot of money to find new and relevant content for their audience. And that's what I worry about is what if they stumble in that? They're going to get crushed. I mean, crushed. I'm not interested in Netflix, but I appreciate that. I don't know. Michael has a keen ability to invest in stock and make money no matter what. So So I don't know. If you're Michael, you could probably make money, but me, I'll invest in it and it'll go down $200 a share. So I seem to have that uncanny ability to buy a stock and have it just hit the skids and stop going up. So case in point, Amazon, Google, and Facebook. So but no big deal. Personal. Thank you to all that served to give us the life that we have. They pay a high price that we can never repay. Thank you. Yeah, you're welcome. And I tell you what, it really reminds me what I saw yesterday. Those guys that wear the Medal of Honor, like I said, there's 72 of them in the world that are living today. 72. That's it. And a lot of them would explain it, yes, as a high honor, but also a partial burden as well, because they know that it represents all those people that you speak of, Les, and not only the people, the fallen victims that, didn't get to make it home, but you think about all the families, and you start to multiply the impact of that. And we're going to carry on that legacy in the U.S., man. It's the greatest country. I know there's people on here from international, but this country's worth loving, no doubt about it. Thank you for that. It's very cool. Jake says, I'm long Disney. I'll bet you are. You've been listening to me a while. I'm long Disney too. So if you're long Disney, we'll see. I've been a shareholder in Disney for quite some time. It hasn't done a whole lot. I think we're in for that stock to shake loose here and head right up to 150. So I think we'll be fine. Hey, that's awesome. Thank you, Les, for that. That's great, man. You go support Brent, man, on his channel. Just picked up a subscriber there. That's very cool. I really appreciate you doing that, man. Show the support for these guys. He's a legit guy. Very sincere. One of the few actually that I actually endorse as a sincere guy. And it's cool because we all have different approaches, but I think our heart's in the right place. No doubt if we can throw out a little bit of financial information, no pun intended. I didn't say financial education. Okay. I said financial information. There's a difference. But I think if we can help somebody, I think anybody in my community would do that. Certainly they'd go overboard to help. So what do you think of JD.com? I own a small position. I own 15 shares of JD.com right now. It's $350 position, etc. I love it. At margin expansion, their price to earnings ratio is out of the ballpark. Okay, it's in the stratosphere. But a nice market cap on a nice growth company. I think you could take some JD.com if you wanted to take congrats, Ryan, the best club channel, hands down. Thank you very much. I appreciate that. I think I do okay too. I appreciate that. As long as people are benefiting from the information in all sincerity, I really don't care so much about, how charismatic I am or getting on here and dancing around like a clown or yelling and screaming at you guys. I don't do that crap. When you talk about people's money, it's very serious business, and there's no topic that I take more seriously than money. So you take that to heart, no doubt. Remember what I talked about? Significance. Oh, that's the word of this message. Significance, the meaning of life. That's from our Medal of Honor winners, but from the panel yesterday. And I'd like everyone in the group here to take that little piece of tidbit and apply it to their own lives. Thank you very much. I appreciate that. But JD.com is a good stock, man. You can buy that. I own it myself, 15 shares. What college or major do you recommend? What major has the most value labor market wise? So I've got Mario Suarez on the line, and this very question was asked yesterday to the chief financial officer of intelligence at technology at Bank of America. So I will give you the answer that he said in one word: cloud. That's the one thing that you could go and you could study. If you could get your degree in cloud computing right now, you are in. And if you could actually get an internship with Amazon and start working there, you could stay with Amazon, or you could go work for anybody, and they would hire you in a heartbeat. Okay, so cloud computing. Obviously, cybersecurity falls into that realm, but you have to really be interested in that topic. But without missing a beat, his response during yesterday's briefing was cloud. Okay. And that, if I had it to do over again, that's exactly what I would go back and I would study, is cloud computing. That's what I would do. So very easy. Thank you for that question, Mario. I hope that helps you. But if I was a young person and I was looking at what major to go to school and get excited about, I would get a technological degree, and I would look no further than cloud computing. And I would be on Amazon's doorstep every single day trying to get in with that company right there. That's what I would do. Why spend 40K to get you a piece of paper in a market? Yeah, Brent's kind of giving you a piece of advice there on college. Yeah, it's pretty tough nowadays. But you know, the one thing that I can say about college is if you have a crystal clear idea of going and getting that piece of paper, it can go a long way for you. Because I tell you what, I was around a lot of suits yesterday that were making, you know, $150,000, $200,000 a year in downtown Manhattan, and they're pulling it down pretty handily. Okay, so hey Ryan, I'm really only exposed to the tech, Apple, and consumer staples, Pepsi and Procter and Gamble. What other sectors or big names should I get in? I was thinking either Chevron or J&J or 3M. All of them, or any one of those will work for you. I've got Alexander hit me up with a question there. That is a great question. Don't get overzealous. Don't get into a rush. There's no reason to rush your portfolio. You're not going to own all the good companies out there all at once, okay? Now, every single stock there that you just named in that particular piece, I own every one of them, okay? I own every stock that you identified there. 3M, J&J, Chevron, Pepsi, Procter & Gamble, and Apple. I own sizable positions, and I didn't build those sizable positions in each of those stocks by buying them all at the same time, okay? So if you can pick one, so be it. An alternative to J&J could be Merck or Pfizer, okay? J&J's got a little steeper of an entry point. It's got a little bit healthier of a price to earnings. You're going to have to pay up for J&J. And of course, 3M, I only bought 12 shares of it, but it's $200 a share. And then Chevron is right around 130. Probably the best energy name you can own is Chevron. So I'm not going to steer you away from that, okay? Because you're going right for the best of the breed. And what you named there, make no mistake, is best of breed. Pepsi, obviously the comparable Coke. I also own Coke as well, ticker symbol KO. And then there's no better. I think you're getting a good name in Procter & Gamble. You already own those shares, and that's a very, very good start in your portfolio. But you could definitely look Chevron, J&J, 3M if you're looking for industrial sector exposure. I see what you're doing. Not to get overexposed, because your 3M exposure 10%, J&J in healthcare 15%, and Chevron 9%. Okay, so that's kind of how it shakes out. So if you're going to go with oil, make sure that it stays around 9% or less. Okay, J&J, you could beef it up to have 15% exposure in J&J, and then 3M 10% in the industrial sector. Okay, that was an awesome question. I enjoyed answering that. That was a lot of fun. Thank you. Please click the like button on the way out. Yep, please do so. Click the like button. I don't like asking for stuff like that. I like it to be generated. I like you guys to think that you come on here and get a little value in a little bit over an hour of discussion. I am going to start wrapping it up, but I'm going to hit these last couple questions at the bottom of the script here. I do want to just thank you guys again for tuning in. Remember, the word of this message was significance. And again, that was coming from our friends, the Medal of Honor winners that I had the privilege of going and talking to yesterday in honor of Memorial Day. We also have Fleet Week going on here in New York City. So I'd like to portray a little bit of celebration for you guys. That's going on here. This is a very, very military-friendly city, and for that, I show a lot of love to New York, even though I don't consider this home. It's a temporary visitation place for me right now. But thank you very much for joining, guys, and happy Memorial Day to all you guys. I hope you guys barbecue it up and have a good time, relax, reflect, and certainly look back over your lives and look at the term with a fresh perspective in regards to the significance of your life and your impact on others. I think that's very important. Been looking into this company for future investment. New Scale. No kidding. Where have I seen that? I'm going to have to take that and look at that. That's really good, man. Doug, you offer some killer stock picks, and anybody who comes on here is going to get some killer value from you. I really appreciate it. I like to know, is real estate mutual fund is better than the ETF? I would go with single stock if I was looking to get real estate exposure. I've got Mystery Queen 86 on the line. That's a really good question. I think you'd be okay with the ETF. You're going to pay a little more premium for a sector real estate ETF. I'm pretty certain. I don't have Vanguard's stats up, but if you go on there and look at the ETF on the Vanguard's website in the sector of real estate, I think you're going to find that that's probably a healthy expense ratio, probably up into the 0.25, so 25 to probably 40 basis points of expense in that. And I would rather just see you go out and buy the best real estate ETFs. I own 2 of them. I'm very open with you guys on what I own in the real estate REIT category, and that is Simon Property Group, traded under the ticker symbol SPG. Okay. And I also own American Tower REIT, which is traded under the ticker symbol AMT, and it's American Tower REIT. All right. Those are the 2 stocks I own. That gives me around $7,000 of exposure to my portfolio. I believe I'm around, I think I'm around 7% or 6 or 7% of real estate exposure. And if you guys are looking for real estate exposure and you have a smaller portfolio, I may look to pick up some Simon Property Group right here. You know, pick yourself up 5 shares of it because it pays a nice 6% dividend. And I don't think an ETF is going to pay you that fat of a dividend. You might as well just buy the underlying commodity, just buy the stock outright. I think you're going to be happy doing so. And I think you're going to find any of those ETFs are weighted pretty heavy with Simon Property Group. It's going to be one of the highest holdings in those ETFs. Guys, I'm going to wrap it up here. Happy Friday to you. I kind of have the end of it. Les, thank you so much for coming on. You're very welcome for the information. Vanguard REIT ETF, of course, there you go. And that's a relatively low expense at 0.12. So if you wanted to go that route, that's great. I assumed it would have been a little higher expense, but 0.12 is acceptable on the Independent Investor channel as our goal. Nyella was on here. Thank you. That's the first time I've seen you pop on here. Thank you so much. Very cool. I hope that advice that we gave you on the retail side that you were looking at for the luxury goods, I hope that helped you. That's very cool. Doug, have a great evening, guys. Honestly, man, I just want to wish all you guys a very happy Memorial Day. Enjoy your weekend, man. Be live feed. I will see you again next week. Thank you so much. I'll talk to you guys later.